Good afternoon, ladies and gentlemen. Welcome to the AQUIS Exchange PLC investor presentation for the interim results for the 6-month ended 30th of June 2021. Throughout the presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted any time via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they are ready for your review. I'd also like to remind you this presentation is being recorded. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Alistair Haynes, CEO, Jonathan Cleland, CFO, and Richard Fisher, Finance Director of AQUIS Exchange PLC. Good afternoon.
Good afternoon, everybody. A very warm welcome to you, and thank you very much in joining us at the AQUIS Exchange interim results for the half year ended the 30th of June 2021. What I would like to do is first of all introduce you. Many of you will know me, and I'm sure many of you will know Jonathan Cleland, who now is sitting in our Paris office, which is why you may not recognise everything behind, because he's recently moved out there. And then Richard Fisher, who you won't know, who relatively recently joined us in April this year as our Director of Finance, and he will go through and give you some more colour when we actually go down to through the numbers. Okay, so to start off with, for those of you who are not familiar so much with AQUIS Exchange, we are one company. We operate 3 divisions, and we have multiple products and services. Those 3 divisions are the AQUIS Exchange, which now operates 2 MTFs. This is the original business. This trades 1,700 stocks in 15 different markets across Europe. We operate in Paris, in the EU jurisdiction, through our operation and license there, and obviously in the UK for both the UK and Swiss markets. And that's where Jonathan is, as I say, in Paris right now. We have the AQUIS Stock Exchange business, and we'll go into more detail later on. That's the primary listing business that we took over last year, that license, and that we'll talk about the progress that we've made there. And then, of course, the AQUIS Technologies business. So the one company has 3 divisions, but we actually have 4 revenue streams, because the one on top of that is data, and data, we believe, is playing a more important part in the revenue and our future revenue going forward. So let's go on to the results. We've had strong growth. On the 2020 maiden profit that we had last year, we've managed to achieve an EBITDA of more than tripled to 1.6 million. We've got a pre-tax profit of £1 million for the 6 months. We've continued to grow the core exchange business by increasing its members and the market share. And we've progressed well on the AQUIS Stock Exchange business with 14 new IPOs this year. That's 20 in total since we've taken over the company. That's ahead of what we actually planned. And we'll talk a little bit about the changes we've made in AQUIS Stock Exchange and why I think this will continue to be a very, very important part in the longer term of the AQUIS strategy. We're currently trading in line with the market expectations for the full year, and we have got a lot of confidence about the future in front of us. So today, and what we're looking at AQUIS, is all about the execution of the strategy. I think we have a very, very clear strategy for the businesses that we're operating, and it's now all down to making quite certain we execute that. And we do recognize we still have a long way to go in many areas. But let's look at some of the highlights here. Today on the AQUIS Exchange, that's the 1,700 large caps, which we trade across the 15 markets in Europe, we have 22% of all the available liquidity. Now, what does that actually mean? That's the bids and offers at the very best price with the price in size. So in other words, the depth, we control 22%. That's the largest of any alternative challenging platform in Europe. That's 22%, including the national markets, is the liquidity that we actually have. That's available liquidity for our customers to be able to trade right now without actually moving or affecting price. We've moved market share. We actually execute out of that 22% the total of 5.8% in Q2 21 of the European market. That actually makes us the 7th largest exchange group in Europe today by market turnover. And that has grown substantially from the 4th quarter, 4.7%, which we achieved last year. We've also grown the number of members to 39. And this has been a difficult task because with COVID, it has been extremely difficult to onboard clients when the technology resource of many of these brokers and banks is limited on this work from home program that most people are operating. So I'm really pleased to see that we've started to gain some traction and have grown the number of customers that we have. You've got to remember that this is with a backdrop of a declining year-on-year turnover. In fact, there were 13% volumes were lower this year than this time last year. And against that, we've actually seen the number of messages used, the aggressive messages that our customers trade against the liquidity that we have, grow by 27%. And this is a new number that we're showing investors today to give more clarity about why we believe the subscription model is working. So this is literally the growth, the actual growth that impacts market share. During the last 6 months, we've also made key hires. You'll meet Richard in a few minutes, but also we've hired David Stevens, who is our Chief Revenue Officer. On top of that, you'll remember last year we hired Viet Lee as the Chief Technology Officer, and we've now completed what we intended to do by strengthening, making that bench strength of the executive committee. And I did have a question this morning. Does that mean, Alistair, you're looking to retire, or Jonathan, or whatever? Absolutely not. Rest assured, I have every intention of staying along in this business for as long as I possibly can. And this is all about getting the bench strength to be able to move and invest, that we can take this opportunity that I think is very clear in front of us and maximize the return for our investors. Here is the chart of market share. We're looking at it this time quarter by quarter. We think that's a better way. Now we've been in existence and public for over 3 years rather than looking on month by month. And you can see the clear trend there. In fact, in July this year, we had 6.2% market share. Now, do not run away with that. Yes, we believe market share will continue to grow. In periods of high volatility, we always see a slight decline in our market share because proprietary traders, the high frequency traders, they trade more at that. And of course, we've banned the aggressive trading from these types of clients. So we will see fluctuation month by month, but the trend, as you can clearly see, that ever since we've gone public, when we were just over 2% market share, we're now around that 6% market share, which, as I said before, makes us the 7th largest exchange trading group in Europe. And again, the emphasis, some of you will have seen this slide before about this liquidity. Here, this is just what I was saying at the very beginning. If you take all the indices, the major indices across Europe, we break it down to each of the single stocks, minute by minute. You look at the liquidity of the bids and the offers, you sum all that up. What you'll have is literally millions and millions of data points here. And you can see that blue line at the top, that for the most of the markets, we are the major liquidity provider. And common sense will tell you that this paradox ultimately changes as best execution with this liquidity that we have, with this lower toxicity that we have in the market. You would anticipate the growth of our actual market share, that 5.8% number, towards that 22% of actual liquidity that we have. And that's why we show this, because it shows, we believe, to investors the enormous opportunity that's still in front of us. I want to pass over now to Jonathan, who will go through and talk through some of the numbers.
Thank you, Alistair. There's a few things I think I'd like to highlight on this slide. First of all, obviously, the overall revenue of the business has increased by 37%, up to 6.7. And this has been largely driven by exchange revenue increases, and also in particular data, where you'll see has been an increase of 187%. We'll go into the divisional results in due course. One thing that you will notice is that the licensing revenue has decreased slightly during this period, and that is mainly because the nature of the business. We recognize the revenue in accordance with accounting standards when we deliver a contract. So when a platform to a client is delivered and they actively use it, that is when we recognize the revenue. So it has been, it will continue to be relatively lumpy, but we're confident and comfortable with our predictions for the rest of this year and building a strong pipeline through to next year. On the expense line, you will notice that expenses have increased by 17%. I think we have indicated in the past that there is a desire to continue to invest in our business. You're seeing, obviously, with Richard on this first call, and as Alistair said, We've increased the bench strength with the recruitment of David Stevens and Viet Lee last year. But all that results in a very strong EBITDA performance, almost treble where we were last year, and also a profit before tax of 1 million compared to a break-even for the 6 months of last year. Finally, just to touch on the balance sheet, we take a lot of pride in the strength of our balance sheet. We think it's very important. It gives us the opportunity to invest or to be, to look at opportunities if we think it's appropriate, but also it demonstrates the fact that the profits, we have a very, very strong cash conversion between the profits that we make and how that results in strengthening the balance sheet. I'm now going to turn it over to Richard, who will run through more of the details.
Hi, good afternoon, everyone. Nice to meet you. Probably just before I start, I'll quickly give a little background to myself. But previously, I was the chief accountant at RBS, and most recently, I was the director of finance at a challenger bank called Redwood. And I joined AQUIS in April, and one of my initial observations is around the quality of the revenue that AQUIS has. And one of the things we wanted to try and do through this slide is to probably improve the narrative a little bit about how we talk to you about that revenue. So the chart on the left-hand side, Jonathan's already described how one of the strengths that we have is that we are driving revenue through 4 different areas. There's no reliance on a single area. Each is pulling its own weight. But perhaps more importantly, I think, is the chart on the right, which talks to the nature of the revenue. And if you look at the pie chart, what we are pulling out from this is that 89% of our revenues are on a recurring basis, with only 7% as transactional. And for us, the benefit of this is as we go forward, we are building revenue on a layered basis. So each year we're able to build on top of the revenue that we've earned previously. And I think that makes for a very compelling quality revenue story for investors. So if I now go to the next slide, the next thing I wanted to just pull out was probably talk a bit more about how we invest and how we look at our cash flow. So the chart on the left-hand side shows very clearly our strong operating cash flow in the first half of the year. The second block talks to this result for cash in the half year was increased because we did have the issuance of share options. But it's actually the third block that I'm probably most interested in talking to you about. And it's what we're able to do because of this strong cash generation. So in the half year, we've managed to invest 163,000 in our own technology and development. And that's on top of a further 154,000 around how we look at our own internal development costs. So cumulatively, we are able to spend the 388,000 in the period. And it's this free cash flow that we're generating which will continue to enable that level of investment in our technological development. And it's how we retain that cutting edge that I think we've spoken about previously. But I hope those 2 slides help, and I'll now pass to Alistair.
Alistair, 1 second. We're just
I just missed the button. No, it's technology. Look, what I want to do now is go through the 4 different revenue streams that we have, look at the 3 business lines themselves, and then data. So the first of all, let's look at AQUIS Exchange, the original business here, and how it's growing. Well, we've got an increase of revenues of 33%. We've grown this market share, which we're pleased about on a difficult background. But for the first time, we actually want to open up a little bit more color on how this model and how the subscription model works. What we have is 39 customers, 9 of whom are in the top 3 tiers. And remind you, those tiers are start at the highest tier for unlimited trading is £80,000 per month, and £50,000 underneath that, and then 30,000. And we have 5 other tiers starting at the bottom from 2,000 and working all the way up to 15,000. Now, what we have is we have 5 liquidity providers. Those people who submit passive orders to the exchange don't pay. Those don't count as messages. We only charge for aggressive. In other words, using the platform by buying or taking from the offer or selling and hitting the bid. So that's how we count the messages. So what we're saying here is that 9 members in the top 3 tiers, but 25 members in the other 5. So not only is this a question of us continuing to grow the membership, and my previous employer, when I was at Chi-X, we used to have 123 members. I believe the universe here is around about 80 to 90 members, because I think there has been some consolidation in the industry. We're sort of halfway there right now with 39. But if you think about it, what the fantastic leverage that this business has, you take just 5 of those 25 sitting, say they're on the 15,000, the top level of those tiers, and we can move them to the 55, averaging fee 55,000, 40,000 pounds a month each on those five members, will give you that 5 times 40,000, 200,000 pounds a month, 2.4 million additional revenue on the bottom line, just by moving 5 customers up. And there's significantly more customers to get, significantly more customers that we can start to move. Now, if we focus on that, what's the margin on that? That's 100%. It costs us 0 additional cost to move those customers up. It's a question now of using data, and this is what our focus is on, is driving those top clients and getting that usage towards the top tiers by using data which shows the quality of execution and the difference between us and any other exchange in the world, which we can now prove. We've gone and hired data analysts into the sales team. We're using artificial intelligence. We're getting expertise in data so we can evidence this to our clients. So I think our focus here is leveraging the synergies that we're getting from the AQUIS Stock Exchange. We've got people who were trading on the AQUIS Stock Exchange in the past, in its previous lives, who now have the ability, realize some of these brokers actually also want to trade in large caps, and they want to trade and they can use us, so we can leverage that. And we're going to introduce more order types. Some of you will have heard of things like market at close. We do auctions on demand. There's lots of things in the pipeline here. So we're going to focus on introducing. Now, those are not included, certainly not all of them included in the pricing schedule. So a lot of these are a bit like asking for Chelsea TV or Racing TV on your Sky News package or Sky package, where you'll pay a premium for the additional usage of specialist products. So there is continual upside on top of the revenue we're generating from the subscription. Jonathan, do you want to talk a little bit about the technologies?
Yes, thank you. I think I've already covered the results on the technology division for the last 6 months. So a couple of things I would just like to go into in more detail. We talked at the year-end results of last year about the proof of concept that we did with Amazon Web Services in the Singapore Exchange, a groundbreaking piece of work where we were able to demonstrate that you could put exchange-grade technology into the cloud and successfully run a platform. And that has sparked not only a lot of interest, but also has, I think, woken people up to the fact that there are new ways of being able to deploy exchange platforms. This is particularly relevant for startup exchanges. The cost of creating an exchange in the early stages, where you would have to invest in data centers and a very big infrastructure build, being able to start instead in the cloud is of major significance to startup companies. And I think this has the proof of concept, the development that we've put in, the continued investment that Richard referred to earlier, all points towards a growing awareness in the industry of the opportunities, and has certainly resulted in a number of inquiries. We are in the process of signing a couple of contracts, and are very confident for the results on this division, not only for the second half of this year, but certainly the pipeline leading into 2022 and thereafter. I'll pass you back to Alistair.
Okay, well, on to the AQUIS Stock Exchange. Here, we've seen radical change. We've implemented new rules, and in very, very simple terms, we have this great belief that companies are like children. They start small, they grow, and ultimately mature. And the problem that we've seen in the past is people tend to use public markets as a last port of call. it is absolutely essential that we bring in proportionality and appropriateness. In the same way as we send our children off to primary school, we have a set of rules, a set of learning, a method of learning that is different to when we send them off to secondary school. There, children have to have homework, they expect different disciplines, and we expect different things of them. And ultimately, they end up at university. And once they're at university, there's a lot more self-learning. In other words, there's proportionate and appropriate learning as companies, as children change. And we feel exactly the same, because in the United Kingdom, we had a very prescriptive one-size-fits-all regulation. It was like sending 4-year-olds off to university, and it feels very inappropriate. In other words, it was costly, it took time, and therefore companies didn't want to raise capital. Now, never has there been a more important time to get capital to SMEs in the United Kingdom. And never has there been a more important time to get the retail market actually part of the IPO process and involved in the secondary trading. And the whole purpose behind AQUIS is to get the public back into public markets, to get capital into the SME growth market, and to make certain that we've got proportionate and appropriate rules that actually are suitable for the types of companies. And that's why we created Access as the primary market, a primary school for these markets, early stage. They don't have corporate governance codes. It doesn't have the same free float. It can be 10%. It doesn't have to be higher. And moving these companies gradually as they grow up into the secondary school, which is we call the apex market. And for there, they can stay right the way up until they're 800 million, maybe even £1 billion businesses. And then they have to move on into the main market. So we have this set of rules, these sets which protect companies. We ban short selling from those companies in the apex segment. Why? Because we want to protect the shareholder and we want to protect the issuer. Because at those points in time when they're a fast stage growth, they need that protection. Not when they become main market, not when they become large cap businesses, but during that early stage. It's like when planting a plant and then immediately cutting it and pruning it at the early stage, that can kill the plant. We don't want that to happen. Absolutely not. We built market making schemes. 8 market makers now are part of this scheme, committed to make no price wider than 5% for retail flow. We think that's important because the retail play a critical part in liquidity. If we don't have the retail, it's very hard to create that liquidity. And we know that ourselves in our own stock, is we want to see more and more retail players involved in AQUIS itself, which is one of the reasons we want to dual list, and we will be bringing our stock over onto the AQUIS stock exchange. So far this year, we've done 14 new IPOs. The pipeline, the sales funnel here is remarkable. We have well over 50 companies coming. These range from access stocks to apex stocks, and some of them are really, really interesting businesses. But one thing, and I'm going to come back and answer some questions because I can see them up here, but one thing is absolutely critical. We have to get the public into the market. The only way you can do that is through the online retail brokers properly connecting and actually allowing people to have access. That is critical. And I'll come back when I answer some of the questions on this and what we're doing and the total misunderstanding that many of those players have about our position, our authority, and our license that we can actually own, and the misunderstanding that these firms have that actually prevent people who are on this call from necessarily making investments online. But the healthy sales funnel and what we're doing, we are further ahead and further down the line than I anticipated at this time. We brought 900,000 of revenue in the first half, and we lost only £100,000. We will be profitable next year on the AQUIS Stock Exchange. And whilst it's not a dramatic revenue changer for us in the short term, it is strategically very important and a real game changer on the value of the company. Because once you've got 200, 300, 400 stocks quoted on our marketplace, that data becomes invaluable. You monetize through data, you monetize through indices, and all of a sudden we actually have a real alternative primary market in Europe for these growth companies. And we want to be the home of these growth companies. It's early stage. The value of the securities that we have is 2.3 billion. That's substantially up from where we were. We have over 100 securities now. We have 20 sectors covered. A lot of people say, oh, but you're only cannabis or you're only this. That's not true. And I tell you, in the pipeline, we have some fascinating e-commerce businesses, e-educational businesses, energy businesses, all sorts of things that are, I believe, really, really of interest to the retail market, which is why we want to get that access. Spreads have narrowed. Liquidity is better. It's up by 700%. But are we happy with that? Absolutely not. It's got to get better and better. And it's going to get better because of the way we're going to deal with the online brokers. Jonathan, I've mentioned just a little bit about data. Perhaps you want to talk a little about the harmonization of the data and the impact it's had on our results.
Yes, it's been a lot of incredibly detailed work, but you know, has definitely been worthwhile. The aligning the data across AQUIS Exchange from the pan-European point of view with AQSE data has resulted, as you'll see, in an increase in revenues of 187%. I don't think that we'll be repeating that performance in the future. I'd love to, but certainly data revenue will continue to strengthen as a result of the increased interest in both the pan-European and the AQSE business. The other thing I would just touch on, we have talked in the past about the consolidated tape. It has gone through so many debates that I think that it is sort of turning into the modern day equivalent of War and Peace. However, I'm pleased to say that, that recently we've seen a lot of positive traction from the Commission, but also in particular from the French and the Dutch authorities, who appear to be completely committed to the introduction of consolidated tape. And we anticipate that this will actually come to fruition probably in 2024, and that can have a material beneficial effect on our results in the medium term.
Thank you, Jonathan. Well, look, to sum up here, I am very optimistic about the future. We have those 4 revenue streams. I'm absolutely delighted to say that I think things are going well. It's very unusual, I think, when you look at the different businesses, one tends to do badly and then one will do well and one will be average. I think in our case here, we are driving forward on all cylinders at this point in time. We have a strong team. I'm absolutely delighted to have strengthened the team, made that investment, delighted by the performance of what's going on. And it's now about that execution. We will continue to invest, but I think as I've described it before, so, you know, we have this jaw effect. Our revenues will, I believe, considerably increase well above the rate at which we will be increasing our expenses. So we end up with this jaw look, which I think is going to really then be very good for the bottom line. And that's obviously very important to our investors. We maintain those core principles that we have, the technology. You know, we are an exchange that operates cutting edge, leading exchange technology, but we do innovate. We've got innovative rules. We've had innovation within the AQUIS Stock Exchange, and we do believe in that transparency. We believe in fairness and equality, and we absolutely believe in the retail market being a part of equities. That, you know, I think many exchanges don't think that the paradigm has shifted, and I know it's a dangerous word to use that expression. It's often hated, but actually there is a significant change, in my opinion, in the way that the retail market has within the primary markets now and the secondary trading of growth stocks. So we want to make absolutely certain that we can continue to grow on that, and we need all of your support in order to make that happen. And finally, just to say, we're currently tracking in line with the expectations for the full year, and we remain very optimistic about what the long-term future of the company is. I can see already, I'm going to pass back now to Investor Meet, but I can see there's some questions that I really would like to answer. There's a few there that I think have raised some very, very valid points that I would very much look forward to answering.
Fantastic. Alistair, Jonathan, Richard, thank you again for the presentation today. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the team take a few moments to look at those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order the team can better understand your views and expectations. Alistair, as you rightly said, we've got a number of questions in there from investors. So if I may just ask you to click on that Q&A tab, and where appropriate to do so, read out the question, give your response. That'll be fantastic. Thank you.
Okay, look, thank you very much indeed. And Steve, I really thank you for your question, because it's absolutely to the point. I'll read it out for people, which is, thanks very much for the well done and the progress, but can you please confirm what the timeline is for gaining online access for AQUIS Stock Exchange listed stocks with the larger retail brokers? And you gave examples, IG, Hargreaves Lansdown, etc. And what, if any, obstacles are currently in the way? I'm going to answer that. And secondly, you raise an incredibly important point. Can you please explain why the AQUIS growth market is currently not HMRC regulated? Well, let me answer, because this creates a problem for SIPs and ISAs. Let me answer that question first, which is we are regulated by the HMRC. And I can send you all the information. We're a recognized investment exchange operating in MTF. We have absolutely the right permissions for any online broker to put us in a SIP or into a ISA. And actually AJ Bell do, Jarvis do, Barclays do, all these things. But Hargreaves Lansdown doesn't. And the problem that we have is the guidance note on HMRC only mentions the London Stock Exchange and AIM, and therefore doesn't mention any other recognized investment exchange. Although the actual law cites any recognized investment exchange which is approved, and we are on that approved list. Now, we have sent to the Director General of the HMRC saying you've got to clarify and change your guidance note because it's inaccurate. And Hargreaves Lansdown, I've seen, because I've received 20, 30 of these messages from retail saying they won't put them in the SIP because of, one, we're not regulated, which is totally and utterly untrue. And the second is because of the potential property tax issues, again, which is a misinterpretation. And we are spending time, actually, I have a meeting with Chris Hill, the chief executive of Hargreaves Lansdown, in a few weeks' time. We really want people. And one of the things that we've noticed is that Hargreaves Lansdown respond when people write to them and complain and say they want it. So I really would like everybody who's on this call, if you have an account with Hargreaves, to make quite certain, and with IG, because IG is playing the same game here. They want to connect to us. They told us they would be connecting in the summer. That has now been pushed back to spring next year. So I think if you know June Phoenix or whatever, I think you should be making those calls, complaining, and say you need it, because we have, by the time that happens, we will have some great companies, additional companies listed here, which will, I believe, be of great interest to the retail market. So from an HMRC point, it is just factually incorrect. And I have to say I'm getting to my limit. Now, we don't want to go out and sort of have legal opinions, et cetera, about whether this is defamatory, whether this is that. I don't think that's the right way to go forward. The fact that they're not telling the truth, what we want is to educate and show them, and show very clearly, as we have pointed out to HMRC, the law states one thing, your guidance note is saying another. One of the most ridiculous things out there is that the word stock exchange, if you go to Companies House, can only be used by the London Stock Exchange. Now, how are you meant to promote competition in an industry when the very, the government in effect are actually saying promote competition, and then you have something ridiculous like that? We got special dispensation to call ourselves the AQUIS Stock Exchange, but it's just not right. And I've written recently to Nikhil, who runs the FCA, to say we need to change the archaic rules that are actually prohibiting competition, which is the very thing that you are standing up and the government actually wants to see in the primary markets. And I think we are making headway. We have to be patient, which is not a virtue that I was ever given, but we do have to push this. On your first point to the question, which is how do we get Hargreaves Lansdown? Well, the answer is, we have to keep on bashing on the door. It cannot be right. We had like 83% of, and I was surprised it was that low, of people in a large share SOC survey said they want access to every asset in the country which is publicly traded. Our stocks are publicly traded. They're on a regulated market. And the number of emails I've received from people who say, oh, you can't trade on AQUIS, it's not regulated. It's just the proverbial bull. It's not true. Their facts are wrong. So what we need to do is get this great pressure from the retail market, because ironically, it is the Chris Hills and the Andy Bells and the Richard Wilsons of the three big online brokers who wrote the letter saying, we want to see the retail involved in IPOs. And the one exchange that has actually gone out of its way to have growth stocks with a growth prospectus, which will allow the retail market into an IPO, is in the case of one of those, the very exchange which they refuse to connect to. So please help us in winning this battle, because there's never been a more important time to have that competition. So Steve, thank you for allowing me to be able to respond and respond quite passionately about this, because we need this change to happen. Not just we as AQUIS Stock Exchange, but we as an industry, in order to get capital, which is provided by retail as well as institutions, to the very people who need that capital to grow the UK economy. Andy has said, what is driving the IPO take-up on your exchange? And how are you looking to use your liquidity technology to enhance this? Well, the first thing is, yes, we have this incredible liquidity, but I think what we have to do is get capital provision in a narrow spread, so that, and connectivity of the large retail focus, so that we can actually increase that. Now, you know, one doesn't need to be a sort of brain surgeon to work out that if we've had, you know, I watched the spreads on the old markets here, the competition, they used to be 20%, 15, 20% wide. Why would a retail investor trade anything that's 20% wide? You know, it just doesn't make any sense. We have to get these narrower. By having this market maker plan, where we issue warrants, not in the public company, but in the stock exchange business, we've issued warrants to the market makers. And in return for that, they have to supply capital in the retail size for these to get the narrower spreads. 8 competing market makers should have a spread way narrower than 5%. It isn't today, but it's moving in that right direction. So it is really important, because I believe all the people on the call today, you would trade far more proactively if you had narrow spreads and a commitment that you were able to execute against these stocks. So we're looking at that and using our technology. We will also use things like continuous auctions and things like that. We're looking at that as a way of enhancing our marketplace. Why are we getting IPOs? And we are literally getting multiple companies a week asking us. I think it's because people have started to find out that we really are a serious competition. Our standards are higher than I think our competition. If you look at AIM, the growth prospectus is a higher standard than the admissions document. It needs FCA approval. And the very fact that we've now got 40 odd advisors, some of the leading names in the industry have all become members. The fact that we have got online brokers now joining us and connecting to us, I think is getting the message out. And people like this school image, the fact of the proportionality and the appropriateness. And I think the more we get that message through, the more we can make this. And I know many of you hate the expression that I use, but the NASDAQ of Europe. We're not there today, but we can be. We can be the alternative exchange for these growth, new economy businesses that I think will give great returns in the long term to many of the investors. Hopefully, Andy, that answers the question. Nick, you've put, do you expect to see more dual listing from AIM? Funnily enough, I'm expecting to see more dual listing from a lot of countries. We've just done UMA from the Canadian market. We've got people coming from the Australian market. We've got equivalents now with the Frankfurt Exchange, so that's in effect the German market. And I do believe we will go along, because I think our offering of a dual list allows you to have all the privileges that we get on the AQUIS Stock Exchange Apex segment. Now, you know, you've got to remember, and again, I'm sure brokers will not tell you this, that we're identical to any growth market. There is no stamp duty on the stocks that trade when you trade with us. There is no inheritance tax. There is all these advantages that you get in the growth market are here on AQUIS. And again, when you go and see this published elsewhere, it's really in the fine detail, and it's not out there in the face. And it's one of the things we're trying to get to HMRC and others is, when you talk about an exchange and you mention London Stock Exchange, you have to mention AQUIS. And I was delighted to see a paper that came out recently from the FCA, which actually now mentioned AQUIS in the consultation document. And that to me is telling me we're making the progress that we need. So I do expect to see more dual listing. The disadvantage, of course, if you are dual listed, is the sell short doesn't work, because of course you can sell short on AIM, whereas we wouldn't allow it to happen on our marketplace. But the company is not protected. The issuer is not, the investor is not protected. But to everything else, as far as the market maker scheme, greater liquidity, all these things, yes, they would benefit from it. Ultimately, we believe dual listing, and then you go, why would you want to be listed on two? Actually, you don't have to have a nomad when you're on AQUIS, therefore it's cheaper, it's more efficient. We have a relationship directly with the issuer, which is alongside the advisor, which is really important, because I know when we floated our company 3 years ago, had a wonderful day, shook the hands, asked to open the market, shook the hands of lots of dignitaries, fed champagne, given canopies. They should have told me it's a leaving party, because in truth, you have no relationship with the exchange once you've listed. And I think that's wrong. I think that's very wrong. We want to have a relationship with our advisors, the brokers, and the issuer. And that's what makes us fundamentally different from what we have today.
Fantastic, Alistair. Thank you very much indeed. I think you've covered off all those questions you can. And if there are any further questions that are submitted today, of course, the team will have the ability to review those. Alistair, if I may, and thank you all for the presentation, just ask you for a few concluding words before we redirect the attendees to give you some feedback, please.
Absolutely. No, as I said, AQUIS is one company with 3 divisions. We think that we are doing well in all 3 of those divisions. The fourth revenue stream being the data, I think has tremendous opportunities. Jonathan talked about the potential for consolidated tape, but I think our future is looking good. We're tracking exactly in line with our expectation, but I think longer term here, we can bring enormous value to our shareholders.
That's absolutely fantastic. Alistair, Jonathan, Richard, thank you again for updating investors today. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order the management can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of AQUIS Exchange PLC, thank you very much for attending today's presentation. That concludes today's session. Thank you and good afternoon.
Thank you.